Back to the local scene, there was a 12.7% decrease in the overall tax contribution by the banking industry in 2020 to 104.8 billion shillings. This has been attributed to, among others, reduction in the corporate tax rate from 30% to 25% and pay-as-you-earn, higher band from 30% to 25%, as well as VAT from 16% to 14%. Banks are projecting an increase in non-performing loans as businesses struggle due to suppressed business environments blamed on the COVID-19 pandemic.
The banking industry is among key contributors of taxes, to the government contributing 27% of all corporate taxes collected in Kenya in 2020. However, in the latest banking sector total tax contribution report, the contribution of banks declined by 1.2% year-on-year in 2020 due to disruptions caused by the COVID-19 pandemic. This was compounded by a decline in corporation tax and pay-as-you-earn after the government reduced their rates from 30% to 25% and from 16% to 14% respectively in efforts to cushion Kenyans from economic shocks caused by COVID-19 disruptions. Loan loss accommodations absorbed 45.7% of non-performing loans in 2020 compared to 40.2% in 2019.
The economy experienced a depressed performance and the quality of assets, with provisioning for loan losses increasing by 47.5% to 198 billion from 134 billion in 2019.
The government receipts increased by 2% from 2019 to 2020, while in comparison, the total tax contribution by the participating banks declined by 13% from 2019 to 2020. The report indicates that there was a 42% decline in excise duty collected by the banking industry last year due to a directive by the central banks that lenders waive fees on money transfer service between banks and to mobile wallets, as well as balance inquiry charges.
I urge you to continue upholding and embracing tax compliance. In addition to being among the top tax compliance sectors in our economy, this sector is a key revenue stream that significantly contributes in domestic revenue collection.